everybody, good afternoon. Welcome to the free market update for Tuesday, the 16th or so? Yeah, 16th of December. So, you got a daily S&P chart here. You can see that we've been in this a little pullback here for a few days now. Interestingly, we're about 100 back from the highs, a 2080 high back in the 1980 area here. And so, of course, the question is, is it time to start buying these things again? And I think the answer is no, not just quite yet. What concerns me is the Fed on Wednesday and the likelihood of there being some volatility there. And if it's going to go, if it's going to go up, on Wednesday, the first thing likely what they'll do is push it down first. Gets a lot of people short, and with that, the idea would be to likely buy into that dip. And so anyway, 100 back from the highs as we can all see, but I'm not quite ready to just jump in there, not just quite yet. So anyway, keep it light and tight. Be careful in this volatility, and we'll look at sometime Wednesday probably getting positioned here for the move into the into the week. So hope this helps. Y'all have a good trade. Nice evening. Let me hop over in the premium video and look at a bunch of stuff. Got a lot going on with gold, nat gas, and treasuries, and all kind of good stuff. So hope this helps. Y'all have a good trade. Nice evening. Hey everybody, good afternoon, and welcome to the free market update for tomorrow. It's going to be the 12th, Friday, the 12th of December, marking about halfway through December here. Holidays right around the corner. Alright, so we're coming into the end of this week prior to next week, of course, expiration. Options expiration for December, and we've been looking for the indices to pull back, which they've done nicely for us this week. It's been pretty volatile, but they've cooperated in that they've successfully pulled back. I mean, it's been a tough ride just to be short and stay short, but here they are. Given today's trade, now when we were trading on the highs earlier today, I thought to myself, I was thinking, oh my goodness, I'm wondering if we've seen the lows, and they happen to come in today. Given the fact that this 55 area up here in the ES on this voodoo, wouldn't you know it, this voodoo line was rejected, price set all the way back down here. To be honest with you, I think we're going to see a little bit more follow through lower tomorrow, and then we buy them probably, my thinking is about midday tomorrow around noon, 1 o'clock, right in there. Now, what I've done is I've added one more moving average here for you. These are the ones that we like to use in our TTM trading, and that is there's an 8, a 21, a 34, and here's a 55. Now, we don't talk about the 55 much. It's not often we see it. Most of the pullbacks are, of course, with the strength of this market, most of the pullbacks have been into the 34. Here we are with a possibility, I don't know, I'd say even likelihood of our seeing, if just a little bit more follow through tomorrow down into this area. We hopefully then we'll say, okay, about midday tomorrow, we'll be looking for the lows to come in. Any little turn off of that, and we start buying them with the idea that you hold them over the weekend and you start letting them out. I would say probably around Tuesday, because Tony's reminded me that we've got the Fed meeting next Wednesday. Now, absent that, I'd be looking for this thing just absolutely to trade higher throughout next week into the expiration, and that is the norm, and that is what we talk about. That's what we've talked about month after month after month. However, please note next week, the Fed midweek, and there is even some talk about maybe some change in the language, and with that, You have to imagine if that's the case, the stocks are initially on that going to break, and that would be on Wednesday. And so heads up for midweek volatility next week. So anyway, here's the idea. Maybe a little bit lower tomorrow midday. Any bounce off right in here, this area, we start buying them. And hey, if that works, and I mean the rest of this has worked, from the highs sitting down into the latter part of this week. If this part works, then we got another good little trade on our hands where we can hold them for a few days and let them back out Tuesday or so next week. So anyway, hope this helps. You guys have a good trade, a nice evening, good weekend for that matter, and catch you at the next update. Good night. Hey everybody, good afternoon. Welcome to the Free Market Update. This is going to be for Wednesday, the 10th of December. Making our way through December here. Got a point to make here. I want to start by drawing your attention to this daily S&P chart. All right. See this high right up in here? That is back on the 19th of September. All right. Switch gears. I'm going to take you to the Russell chart. Remember the date, the 19th of September. Question. Where was the Russell on the 19th of September? Was it at its highs like the S&P was? Answer, no. It was well off its highs. Point being, it broke first and started the descent which led to a 10% correction. Question again. What day did the Russell make the turn off the lows here? Turn up off the lows. 1014. Okay, let's go back to the S&P. Question, what day did the S&Ps really make the turn off of the lows here, as you can see? Answer 1017. You could answer 1016, 17, doesn't matter. The Russell made the turn first. That's the point I'm making, all right? And the reason I'm making this point is now I want to draw your attention to the present. You see the sell symbol or sell signal that's trying to populate here on the day today for the ES, which by the way opened 20 lower and filled the gap. Traded down to essentially the 34 EMA and bounced very, 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 very nicely from there. I'm going to take you back to the Russell and make a point. Do we see that in the Russell? Answer no. The Russell sat down immediately, reversed course, and it was first. Intraday, trust me, it was first. It filled its intraday overnight gap today while the S&P still had a 15 full point deficit to make up. 15 handles shy of making its gap, the Russell was at its overnight gap. These types of market correlations are those which you have got to pay attention to. And if you miss these kind of things, then you're not as sharp in your trading as you can be and otherwise would be. The point I'm making here is the Russell's telling me that we're quite ready very, very soon to making the bid for higher again. I'm going to look for that low to be this week sometime. Maybe it's tomorrow, maybe it's Thursday, probably Thursday or Friday, but nonetheless, if you're a swing trader, you're going to be looking to buy this break, and very, very likely, I do believe, hold it throughout not only the end of next week into the expiration, but into the end of the year and the first part of next year. So, hope this helps. You'll have a good trade. Nice evening. Catch you at the next update. Good night.